Hey everyone, this is Anna Masker from ProfitLink. Thank you so much for joining us for today's webinar, The Great Cash Reckoning. I'm going to be your speaker today. I'm part of the leadership team at ProfitLink. We do CFO advisory and accounting services for small and mid-sized companies. We have two arms of the business. One focuses on tech and companies in the blockchain and crypto space, as well as this other arm focuses on professional service providers. For those of you who don't know what exactly we do, we'll do everything for clients, including budgeting, forecasting, helping them navigate the PPP program, doing the PPP loan calculators, as well as helping the businesses scale up their accounting function, as well as providing day-to-day senior accounting. So we don't do tax, audit, valuation, so we're really kind of an outsourced in-house team for you. One thing we start off all of our webinars the same way. You know, this is for informational purposes only. We're not here to provide tax or legal advice. You're a tax accountant or attorney really has a better picture of what your specific situation is, so please contact them if anything that we bring up today is specific to your situation. So what is this great cash reckoning? To me, we're foreseeing this big cash reckoning happening in July. This is when stimulus money runs out and deferred payments become in the midst of a slow recovery. I think we all had hoped by now, we would be, quote, business back to usual. And we thought that the opening here in the Northeast would be faster than where they are. So we're still slowly recovering, slowly opening at much reduced capacities. But stimulus money that's going to run out, or programs that have deferred payments, that's going to cause some issues. So I put together this little, not so pretty chart, but a graphic that kind of shows you visually what we've been thinking about, right? So if you remember back in March, the government or the IRS was allowed deferment of your 2019 tax payments. They deferred from an April 15th deadline to July 15th. They also did the same for your Q1 payments that were due in January, in July as well, from April to July as well. And the same thing from the Q2 2020 tax payments that were due in June 15th are now also due in July. You can see all this tax deferral coming on July 15th. Also, many of our clients have negotiated deferred payments with their lenders, and most of them have again an extension for 90 days. However, those 90 days, if you triggered that in early March, those are also going to start kicking in and coming due. PPP payroll protection program, the funds were distributed in April, May, and part of June, and you had 8 weeks to actually use those. So a lot of people's PPP funds, those that were spending for 8 weeks, those monies are starting to run out. That has now been extended for 24 weeks, but a little too late. Because a lot of people are almost in their 6th, 7th, or 8th week this week if they got funded in the first round. So those funds are starting to run or will run out in June, July timeframe as well. And then we also have the federal unemployment benefit, an additional $600 per week. That's going to stop, on July 31st. And from what I've read, they're not looking to extend that any further beyond July 31st. And we also have the employer portion of the payroll taxes that's been deferred to December 30th or 31st. So that's the can that's been kicked down the road. But as you can see, all of these things are starting to converge on this July timeframe. And if you're not aware of it, this could really sneak up on you. And not only will it sneak up on you, it's going to sneak up on your clients. So we're going to talk about why this cash reckoning is really important, some strategies to manage around it. So the question is, did you foresee it coming? And if you haven't, let's talk about what you need to do to think about that. So many businesses, like I said, aren't looking that far ahead. They're way too wrapped up in managing the day-to-day and in survival mode. Most of the companies that we've talked to aren't really thinking of cash forecasting in a very, systematic way. They're kind of doing back of the envelope calculations. But that's a lower priority. They know they can get through the next 2-3 payrolls, but they're really just in survival mode. Then a lot of them are also really wrapped up in HR issues. Working in the new norm is top of mind. Do they need to provide PPE equipment? What's the reopening look like? What's the capacity for their businesses in the new economy? That's where their heads are at. So now the question is, what can you do now to plan for the post-stimulus economy? I mean, what's the impact on your business? But more importantly, what's the impact on your clients' businesses, which ultimately will impact you? Your clients aren't thinking about it. You should be on their behalf. So that's why we think there's going to be this second wave of a downturn, at least a cash crunch. I think in the beginning of this crisis, we all went through and really cleaned up all of our expenses. We really reduced cost. But now I think that with all this stimulus money, with the deferrals coming due, all of that is going to hit at the same time. One of the things we learned in the 2008-2009 recession was, there was a lot of money in the economy, a lot of cheap, easy lending. And when that got retracted, it's almost like a wave on a beach, right? And when that gets retracted, you see all the stuff that's underneath, all the garbage that's happening. And so businesses failed. I think we're going to see something similar here. I mean, we're already seeing that many Main Street businesses are closing their doors. We obviously expect more to happen. A lot of companies are just operating, bare bones cash at this point. And they've been using the PPP funds to supplement, their employees' paychecks or have brought people back. But as those monies are running out, we think that there's going to be more layoffs coming as that money goes away, and businesses can't afford to maintain the payroll that they have been with PPP. So that, coupled with the federal unemployment that's ending on 7/31, I really feel like there's going to be really a big drop in consumer demand for those that are unemployed. We're also seeing that banks are going to start scrutinizing their loan portfolios and reviewing their covenants. They have been overwhelmed with PPP as well, and they are now having the time to go through and really triage and look at their portfolio, figure out who's really at risk. So the question is, what is it you do? And our default always is have a plan and execute. So this is what it looks like when you don't have a plan, right? You're blindfolded, you're flying blind, there's money flying out of your business, there's opportunities that you're not taking advantage of because you don't even know that they're there. So, we're planning, but hey, that's our MO, right? That's what we do. But it really, I always say that putting together a plan is not in the papering of the plan, meaning like, putting together the spreadsheet. That's an exercise, but the real putting together plan is the discussion around what is going to happen with our business and strategizing on how you're going to navigate. So we feel like there's really, you need to put together your cash playbook, and that's two components. You've got a long-term plan, which is 12 months. You want to run that with different scenarios, and then we have a 13-week cash forecast. So why would you do a 12 to 18 month plan? Very simple. You got to look beyond the end of the year. We know this crisis and the recovery is going to take a long time to get back to, and I put in air quotes, business as usual. So a 12 to 18 month rolling forecast is really critical to help you look beyond just the end of the year, beyond just your tax filing, to really what's going to happen. So you want to make sure you think about your different options, and that means running scenarios on if my business stays status quo, if it goes up or down. And also that the 12 to 18 months is going to take, in some sectors, it's going to be how long for the recovery to happen. Obviously, if you're in travel and entertainment, that's going to be a longer time horizon. If your clients are in that space too, you got to take that into consideration. And then by knowing your 12 to 18 month horizon, it'll allow you to frame your short-term decision making with your overall plan. And what do I mean by that? That basically means that if you figure out, do I make this cost cut? Do I let this person go? You're making that in more framework by looking at where do I think my business is going to be in 12 that person critical for my organization to survive, then will I get a short-term benefit by laying them off now? Yes, but in the long term, is it going to jeopardize the health of the business? So having this 12 to 18 months will allow you to have a little bit more of a broader framework in order to make those tough decisions you have to make. What do you use for creating your long-term plan? Big fans of Excel here. We like Excel. It allows you to do a lot of manipulation, but we're actually leaning a little bit more towards some canned software programs. A lot of the functions that are in Excel that are easy to maintain and update and feed data into. There's some out there. It really depends on the situation and our specific situation, but there's Live Plan, there's Plan Guru, there's Jira. There's a number of softwares out there that some companies use. The other thing is you want to make it easy to update. This has got to be a dynamic in which you use to navigate your business. So it's not something a fix and forget it, it's something that you revisit. And you also have to use it. So we recommend highly update your 12 to 18 month rolling forecast every month at a minimum to see how well you're tracking to your goal. And the other piece of using it is, I always like to say the learnings are in the gaps. So for example, if you put together a plan and you fall short of that, learning is in the gap between what you expected to happen and what actually happened. Okay, so the learnings are gaps because either your forecast was wrong, right? And so you need to rethink of how you forecast, or your forecast was okay, you fell short of expectations, and then the question becomes why? And that's where you start troubleshooting. So a lot of clients say to me, well, it's futile to put together a plan for myself because my business changes so rapidly, and especially in this economy, it's changing so rapidly. But having that once a month at least, sit down and look at your numbers really helps you become savvy and helps you nip things in the butt really easily or quickly. Again, we talked about running different scenarios, whether that's keeping the status quo, a 40% decline, or in some industries, uptick. The key is that you write down the actions you'll take in each scenario. What this does is it takes a lot of the emotion out of the situation, whether that's cost cutting or headcount reduction. So when you do these scenarios, you do that 10% and you say, what's going to happen if my business is 10%? What actions do I need to take? So you already have a plan as opposed to when the business drops by 10%, then scrambling to figure out how you're going to make it. Again, and then it also takes out the emotion that a lot of us have had to go through with the downturn and letting people go or or things along those lines. So having the written action plan is really critical. So that's the long-term plan. The short-term plan is your 13-week cash flow forecast. So the 13 weeks allows you to see the full quarter's worth of payments. And this is where you really get tactical. This is where you're looking at your micro level. You're looking at what vendors are going to be paid, what customers receipts are coming in. You figure in your payroll, your owner's draw, your loan payments, all of those monthly recurring payments all get factored into a 13-week cash forecast. Why is it 13? There's certain things that come in once a quarter. So sometimes workman's comp is a quarterly payment. Sometimes, well, it's your estimated taxes are quarterly payments. You want to be able to see the full-fledged quarter so that you can make better decisions on the micro level. Like I said, this is extremely tactical. You're making week by week decisions, what you can afford to pay and what you can't afford to pay. Now, the key is that you review this weekly at a minimum. What we've done for some of our clients is, we start with a cash forecast. We do it on Monday for the week. We see where the cash receipts come in, and then we cut checks on Friday. So it's got to be a disciplined forecast. The more cash you have, the little bit more breathing room you have in your 13-week cash forecast. Some clients really on razor thin balances. We don't advise it, but you spot on your cash forecasting. So figure out how to a little bit of a reserve, just even if it's a couple $100 a week, and you sweep it into a savings account, at least you have some sort of cushion there. So what are the tactics to navigate through the reckoning? Now's the time to start renegotiating. Before the rush of, before everyone comes to the awareness of this big cash reckoning in July, make sure you are talking to your vendors now and extending your payment deferrals before your payment terms run out. The same thing for your rent. Go back and renegotiate rent deferrals, reductions. A lot of people have already used their security deposit. Now's the time to do that before everybody goes back to their landlords, and ask them for the same thing. So that's renegotiating. Now, what can you do to be proactive? First thing you need to do, you've done your 12 to 18 month forecast, you'll really have an idea of where you stand with the business. You got to get back and you got to review your loan covenants, and then have those conversations with your banker. We're always big believers of being proactive with your banker and letting them know what's going on, but more importantly, what plan you have in place. You need to be laser focused on clients and receivables, especially those that are clients that are in risky sectors or who may be in financial distress. Now's the time to get even tighter terms with those folks, shorten them, especially for the next 3 to 6 months. Again, we're trying to be defensive and proactive to protect your cash flow, because there may be a lot of companies who may not see this coming. So we all did this big review of our P&Ls at the beginning of this crisis. Now's the time to go back and look at a second cut and see what other places can be cut, those expenses that you hung on to thinking that, either the recovery was going to be faster or that those expenses were necessary. Now's the time to go back and try to figure out, is there additional spending cuts within the P&L? The other thing you need is consult with your CPA on options for deferring your quarterly payments, your strategies around your 2019 estimated or tax payments. There's some provisions that you can pull back some losses from the first quarter into the previous year. Again, talk to your CPA for those strategies. You alleviate some of this cash burden if you owe taxes for 2019. After you do all that cost cutting, or you've looked at everything, you really need to understand your borrowing options. Lay out what are your credit options, what interest rate, the term, looking at your loans, your line of credits, or heaven forbid, your credit cards. Where are you going to get cash if you're going to be really tight for this after this reckoning? Again, talking about loans, know your loan covenants, understand if you'll be able to meet them. Assess the risk of your loan or line of credit being called in. A lot of companies in the beginning of the crisis, their line of credit to the max. If you feel like your line of credit may be at risk, it's a strategy you need to take in consideration, but in a broader picture of your total financial picture. Don't forget that a lot of your loans are personally guaranteed. So you're talking about your home being at risk or things like that. So this is kind of a, a scheme, but it is a strategy that you can employ. Maybe go back to thinking of your startup days, friends, family, personal reserves that you can use to bridge you through this. But I think the realization or the reality check is, if you're doing that 12 to 18 month forecast and you're looking at your 13-week forecast, you're going to know what, or have thought through at least, what the viability of your business is in that time frame. Okay, so obviously you want to make sure that you're not putting your personal assets at risk if you don't think your business is going to survive. So if you've done everything you can, you've cut your costs, whether you've been shut down or the market has changed, all of these in the context of your 12 to 18 month plan, and your borrowing, and the implications on your borrowing and your cash ability to tap the various things for cash. The key is right now is speed. We are the first week of June. We're looking at maybe 4 to 6 weeks before all of this starts to unravel and unwind. You need to be decisive. The time horizon there. Get your scenarios written out so you can game out the options. Like we said, your cash needs to be revisited weekly as the business change, and we are students of the market. Make sure you anticipate how things are going to change in the recovery. So that's all I have on the great cash reckoning. Please think about this and put together your forecasts. If you need help with putting together your cash forecast or your 8-month plan and talking about strategies and opportunities in the market, please don't hesitate to give us a call. I also want to invite you to our next webinar. We have standing Monday meetings on Mondays at 11 a.m. Eastern. This week, or this upcoming week, we're going to be talking about the Payroll Protection Flexibility Act that just passed the Senate, and that is making significant changes to the PPP program. So we're going to talk through that and on Monday the 8th. So don't forget to register. You can go to Managing Through the Crisis, and I will hope to see you there. Thank you so much.